Hey, listeners, welcome back to the Value Hunt podcast. And today I'm truly happy to be here with Ali Gündüz. He is like a good friend, like you know already from past interviews, maybe. But today we are here to present a presentation Ali has on evolution. So I was really excited when Ali posted on X, Twitter, about his presentation and if someone was happy to host him. So yeah, let's do this. And Ali, maybe you want to say a couple of words before we start with the presentation.
Sure. And hi, David, first of all, and thank you for giving me a venue to air my almost like grievances, not grievances, but like the it's basically my fifth anniversary of purchasing my first share of Evolution is coming up, and so I guess it was a reason to go through my history with it, and it's now a long enough time where you can start drawing some conclusions, I think.
Yeah.
Whereas if it's been just a few weeks or months or even just a year or two, it may have been too early to come to some conclusions. But I think starting with 5 years and longer, you can start to draw at least some early conclusions. And yeah, it's thank you for giving me a venue to share my experience.
Sure. Okay, so I think you can start maybe sharing your screen of the presentation. And yeah, I'm really curious to hear the presentation because I haven't looked at it, obviously.
Mhm.
So I think these are interesting times for evolution. Some comments made by the CEO and also just like them going through all the problems, I guess. So
Right.
yeah, I'm really curious to see
Sure,
what you have
sure.
to
You can
share.
say whatever you like about evolution, but it's definitely interesting. Like whatever conclusions you get from it, I think it keeps being a very interesting business. But let me start with the presentation itself. As I said, it's the fifth year anniversary of my first purchase of an evolution share is coming up, and it's a it's a milestone, at least for me, to look back and see like what has happened in good and in bad, and whether I could draw some lessons from the whole thing. And before we go through with the whole thing, a quick recap on what evolution is to give a sense of how I approach the company itself. It's a live casino supplier from the point of a basic player. It's how you go through with it is how you play online in an online casino is you go to a casinosomething.com or some kind of a branded app of a casino operator, and you play basically casino games there. It can be like slot games where it's like a virtual video game, or it can be a live casino game where like Evolution's game where it's you see an actual person with the physical equipment and so on. And as you can already get from this is when you go to an operator's site, the games you play is most probably not developed by that operator itself, but they are supplied by other game suppliers. Evolution is one of them. And to give a quick analysis of the actors in this market is, well, you have the players who decide what to play, and they are the originators of all revenue for everyone in the sector. And from their point of view, there is little difference between casinoa.com and casinob.com, right? You just go to on your browser and you enter a new domain and a new URL, and you're at the competing online casino. So there's little loyalty there, but players usually tend to have a favorite game or a game type or a game franchise, and so that can create an interesting dynamic down the line between the operator and the supplier. And what does the operator do? Well, they run the casinosomething.com or the app, the branded app for that. And they first of all, pay for ads and marketing to acquire players for their venues. And a dynamic from it, due to the lack of loyalty by the players, is they have to keep spending money on that marketing and for that ads, because even though you get a player, they don't tend to stick to you, at least forever, and they can keep getting acquired by different competing casinos. So you have to keep paying for that ads and marketing. What other things that the operators do is they check the player ID. They hold the actual real life identity of the player. And if it's a regulated operator, then they also do some checks against that player ID as well. For example, if that player is in a no play list at a local market and not. And also the age verification checks, of course. And that operator also handles the payments, handles the cash. So what's left to the Evolution? Well, Evolution develops the games. They run the real life studios, which acts like as in real life casinos. And what they can do is, since they have their games, their branded games on multiple operators on multiple casino.com, so to speak, they can stream from one table, from one studio to multiple operators and to a multiple of players through those operators. And this can already like tell you that they can have a great operating leverage where you pay just the salary of one presenter, and in some games you can stream up to 30,000 players or more. And Evolution retains the branding of their games, so the players know that it's an Evolution game. There's a logo of Evolution on the game all the time, and you can also click on that logo and go to the lobby of Evolution only games, so to speak. And in the end, how it generates revenue and profits is Evolution basically at the end of the month collects a percentage of the casino's winnings. So when you look at the expenses of running a casino and a casino supplier, well, the majority of the expenses are handled by the operators, right? They have to pay for the ads and marketing against player churn all the time, and they have to handle the payments and everything. And what Evolution does is basically pay for the salary of the presenter, but other than that, they just collect a percentage of the casino's winnings, and that percentage is calculated before all of their ads and marketing costs, so to speak. So it already tells you the business dynamics, the market dynamics already hints that Evolution is in a great spot in that market to generate a lot of profits, and it has been like that between the 2020, when I first got to know the company, till roughly 2023. The organic growth rate has been between 20 to 50%, and like almost 60% of that revenue went to the bottom line after tax earnings. And so it has been an amazing performance. On the right side of the chart, you can see the revenues and the profits and the free cash flow. And I have cut it off at 2023 for a purpose, as I'm sure you can guess. But I wanted to draw some lessons that could be had without the benefit of a hindsight, obviously, because that's how you use the lessons in the future as well. And we will come to, what I mean, when you have such a great business with such characteristics that you see on a chart, like what can go wrong? Like why shouldn't you invest in it, or why should you invest in it? Then is I guess the point of this presentation. And let's go through my personal story, my investment story with Evolution quickly to give you a sense of my personal returns from it. As I said, I first purchased 5 years ago. It was back then around 550 Swedish crowns, and I have continued to buy it and averaging up my cost basis up to almost 1,600 by 2021. And then there was a complaint, public complaint about the company and some other headwinds, and it has gone down to almost 800 by September 2022, and I have averaged down through that price decline as well. And after 2022, I had some small purchases, but by end of 2020, I made almost all of my purchases. And so by 2022, on a cost basis, it was almost 20% of my portfolio Evolution. And I work mostly to a large extent with a lump sum. So this is, it's not like I add a substantial amount every month. Despite that, when you look at it today, it makes up only an almost like 8% of my portfolio. That's basically because the lack of returns from Evolution itself, and I guess the returns from the rest of my portfolio. And what was the valuation when I bought it? It's been like how I calculated back when I was buying is, well, on the right side you see the quarterly EPS numbers, earnings per share numbers for the company. When you have such a quickly growing company, which valuation do you take? Well, I don't want to take the last 12 months of EPS because it's the thing is growing so quickly. Like the like the earnings per share like 3 quarters ago doesn't really made sense anymore. But I also didn't want to, I guess, depend on analyst forecasts or somebody else's basically estimates. So what I took was I just took the last quarter's earnings per share and multiplied it by 4, which gives you the run rate EPS. And I calculated my purchases in relation to that. And throughout my purchasing, it has been roughly between 40 to 50 multiple times of that run rate EPS, basically. And to make a quick stop here, valuation will not be one of the lessons I will draw from the story, and it may be right or wrong to do this, but I'm still not clear on exactly what would the lesson be from the valuation. Obviously, the easy to draw story from this is just don't buy anything at 40 or 50 PE because the expectations are so high. Any surprise you will get will most probably be to your downside, and you should protect your downside at all costs, and so on. So that's one possible story, which I'm not exactly objecting, but it's also would be, I think, I find it kind of a little lazy to get that lesson from it, because I'm sure you can also come up with a few examples where you could buy a share at 40 to 50 PE and you would make still great results, right? So like, I'm sure you can think of some examples, and you can also, I'm sure you can get some examples where you could buy a company at 10 or 5 times its run rate earnings, and it would be a horrible investment too. So I don't want to exactly get a quick and easy lesson from it, but it's it's a lesson that your viewers could maybe get. It's up to interpretation. Back when I was buying, on the right side of the chart, you see some of the bars that are more more brightly colors, and those just are there to show you how quickly the damn thing was doubling itself. It was doubling its earnings every year to every 2 years. So when you're buying at 50 PE or 40 PE, what you're getting is like if the EPS is going to double in a year or two, then you're having 20 to 25 PE, right? Then if it still has a great runway, then you'll probably made a claim in your performance. And as we'll get to it, that was the main difference maker, how quickly the EPS could double. Yes, the obviously what I couldn't foresee at that time is how that growth would suddenly come to that growth would come to a halt, basically. And to close up my history with the Evolution share itself is throughout this story, throughout this 5 years, I have never sold a share in the company. And when you look at it today, my total return, so including dividends, is almost minus 30% on euro basis. Having said that, I have some other types of returns from my story with the company, which I would call non-financial, in the sense that, well, first of all, it was a great learning experience for me that I took it as such, where it was one example of a company where I would follow every public filing or every public information basically that I could, and I followed it as closely as possible. The details and minutiae of its accounting, I would, maybe we have discussed it before, but I found even like some small mistakes in the numbers of some disclosures. And I also, it was the first time for me where I tried to take an active role in a public company and try to, make some difference. I think I did with the capital allocation, and I have another active proposal online for the last couple of months, and we'll see if that would make a difference. But it has given me an education that's that has value by itself. And in addition, I learned how to network in a completely new and emerging industry that's been completely foreign to me 5 years ago. And I met a lot of people. I went to some interesting conferences and meetings throughout Europe, and met a lot of industry insiders. And these people also tend to be, because iGaming, let's be realistic here. It's a form of gambling, and it's not exactly a sector where a typical parent would want imagine their child to get a great education and go into it, so to speak. Maybe because of that, like, it's full of colorful people that are also quite independent minded, in my experience. So I met a lot of interesting people through that, so I enjoyed that a lot. Plus, because I'm following the company Evolution so closely, I got to meet a lot of investors that are much of a higher caliber than me, simply because even though those people would, had a much better knowledge and skills in investing, at least when it came to Evolution, I had something to contribute to them. So that was a reason for us to have a conversation. So through these things, I think I got some returns from my investment in Evolution that was not financial. So even if Evolution is zero tomorrow, I would still count some positive returns that are not financial, so to speak. But let's go through the story, what happened, what went good, what went well, and what went not so well. First of all, not everything that could go wrong did go wrong. A lot of the risks that were top of the mind back in early 2020s actually did not materialize, and they actually, went on the, they were realized on the upside, so to speak. What are those risks, and how they, didn't materialize is, well, first of all, product leadership. Back in 2020, Evolution was the leader in live casino supply, and they still are, in my observation. They still have the best products. They're still the leaders in innovation, where the competitors, even the big ones, tend to simply copy Evolution's games rather than come up with completely new types of innovative games. Their execution back in 2020 and 2021 were quite great, and one could always see kind of a risk of, what if the execution will not be as great in the future. Well, it has been close to great. There was, I'm sure the viewers know about the Georgia story, where there was a temporary strike there. But aside from that, when you look at the big picture, how quickly this company grew all over the world, and how the Georgia strikes didn't come to to a big problem, let's say, didn't reveal a big problem in the company. And when you also look at that, the game development itself was executed also close to perfection. I think we can be quite happy with the management and how they executed their plans. Another thing is, in regulated markets, wherever in the world there was a new regulated market opening, Evolution kept being the first. And there was they execute quite well in that sense as well. And specifically in the US, they again execute close to perfection, whereas they right now have a quasi monopoly in live casino. I would say there's a second place supplier, Playtech, that also has some live casino supply in the US. But when you look at their numbers, well, first of all, they're quite small as operations when compared to Evolution, and they're the more they try to expand in the US, the more money they seem to be losing. And because of the limited scale of the US state markets, it's quite a difficult place to be the second biggest player, second biggest supplier in those markets, let alone being the third and fourth. So we can say that the Evolution's monopoly in the US states look quite safe, at least for the foreseeable future. Another risk that people always talked about back in early 2020s was insourcing. If you're a big casino supplier, or if you're one of the big land-based casino giants that are going online, or if you are Netflix or Amazon, why shouldn't you go into this, this highly profitable and high growth tech sector, basically? And for one reason or another, we don't have to go into details of it, but none of them did. No one actually managed to insource their live casino. And finally, there was always and continues to be a key personnel risk, so to speak. What if the CEO or the CPO leaves the company? Well, at least up to this point, until now, this has not materialized. All the key personnel are where they are, and they seem to be, committed to the company. These are the things that have gone well for the company in the last 5 years, but that was not the whole story, obviously. So a lot of things also have gone, well, not so well for Evolution. I will go through a few things, but before going through them all, it's important to note that almost all of these issues that we'll talk about are external to Evolution. So they are not done by Evolution, or they were not exactly under their control to a large extent, but they just happened to the company and to the whole, I guess, markets in some sense. And I'll group them into two. Well, one of them is the post-COVID slowing of the iGaming. Obviously, COVID, the pandemic, was a great provide a great boom for iGaming sector in general, and Evolution took great advantage of this and obviously grew their sales and profits a lot in early 2020s. But it seems like starting in mid 2023, there has been a crash, an unusual amount of drop in the rate of growth everywhere. And another thing that slowed down has been the regulatory opening momentum of the global markets to iGaming. A couple of very big markets in Europe, particularly France and Germany, they did not open up, or in the case of Germany, there is some regulation, but it has been done in such a way it's practically turned a gray market into a black market with a very small legal market or regulated market in the country. And then in the US, a lot of the big states that that could be hoped to be opening up, at least have not yet. They haven't opened up. So there's a slowing both on the demand side, but also on the regulatory opening side as well. And then there's a group of problems that happened to Evolution, I think, that were partly due to the company's own success. But first of all, there was, I guess, management's belief that whatever they touch would turn into gold, and they said, "We're great in live casino. We're so successful. We are so successful here." Well, live casino is actually a small part of the whole iGaming sector. The large part of it is obviously slot games, and they said, "Why not expand in this vertical? If you're so successful in live casino, they'll be also very successful in this other bigger field of slot games." And they spent a lot of money and diluted the stock a lot to make some big acquisitions into the slot game developers. And these acquisitions basically turned out to be wasteful and distracting for the management and for the shareholders. This was, I guess, I'm calling it some kind of a hubris, but it's also something that's, I guess, can be understandable on human terms. When you're having such a great success, you do not exactly know how much of it is because of circumstances, or because of luck, or because of your own personal input. Another way that Evolution fell victim to its own success and growth has been the minimum global tax initiative, where starting in last year, there was a minimum tax rate for companies that are above a certain threshold of revenues of $1 billion. And Evolution is obviously right now not a small iGaming company. They're well above that minimum revenue threshold, and that made them double or more their tax rates. They used to pay just 5 to 7% tax on their corporate income, and now they're looking at 15% or more, basically, simply because of their size. And another way that Evolution fell victim to its success has been on the regulatory side, where European regulators, starting with the UK one, realized that enforcing some restrictions on evolution is a lot easier than try to plug the black market URLs or try to stop payments to those operators. And so in Europe, evolution has started exiting black markets. The problem is here, the because of the restricting regulations, the black markets continue to thrive. And actually, it's the white markets that sometimes have trouble in growing up and attracting players to themselves because of the restrictive rules. And so that means that evolution singularly had to exit black markets, whereas their competitors are free to at least for now, free to enjoy the profits there. And in the end, as last, it's the Asia problems, the piracy or cyber attack problems, where when you're growing so much with so much profits and so much visibility in a market, well, you obviously attract some attackers. When it's not the competitors, then it is the content pirates, and this is what happened with Evolution, where somebody cracked the code on how to pirate Evolution's content and remake their own games based on top of them with their own betting systems. And this is another reason why a big growth market for Evolution has just completely stopped almost. So these are what has happened, and the results from those problems has been the crashing growth rate. On the left side, you see the organic growth rate of the company through the quarters, and during the post-COVID boom, it has almost hit 60%. And as you can see, in 2023, it has crashed a lot, and now it's closing to almost 0%. And an interesting side effect, or like a side lesson from this, is how actually prescient the Mr. Market has been. When you look at the Evolution's share valuation in the market, it has actually crashed the majority of its, of its drop. It's made the majority of its crash back in 2022. And you can say, obviously, there was some other problems in news back then, but one could also say that Mr. Market has foreseen the crash in Evolution's growth much earlier than a lot of individual investors, back when the growth rate was still around 40%. So that's another, I guess, side lesson to respect Mr. Market. Yeah. And where are we right now? Well, we are past at least a temporary peak in the financial results, where both live casino revenues and profits per share has actually dropped on a quarter-on-quarter basis for the first time. And it's important here to remember that Evolution's revenues are largely non-recurring, meaning that the company starts every quarter with close to $0 in guaranteed revenues, unlike, let's say, Netflix or another subscription business. And it has to earn every euro of revenue all over again with the player activity. So market doesn't owe Evolution a baseline of revenues. And this also means that there's nothing stopping from Evolution's financials, its sales and profits, from actually shrinking from here. Because, as I said, it's starting from zero, and at the end of every quarter, we'll see how much the players played Evolution's games. It doesn't necessarily have to shrink, but it's certainly a possibility that the shareholders have to keep in mind, I think. So this was the story. And what lessons did I personally take from it? Well, there are a few of them. First is casinos are not taxis. While I approached Evolution and its regulatory status a few years ago, was that I likened to Uber's early years when it was a relatively new startup. What was Uber when it was a young company? It was basically a black market unlicensed taxi service, right? When it first started. But right now, it is a highly regulated and almost completely regulated normal company. Well, what happened? Well, Uber didn't exactly change its business model. It was the regulators and lawmakers who adapted to the high consumer demand, right? And this is how actually the regulatory openings of iGaming also happen in iGaming. But it's a lesson, I think, to remember and keep in mind that regulations are politics in their nature, and gambling is politically a risky subject. It's not exactly like taxi services or mobility, where it's easier for a politician to argue for a regulatory opening of a taxi service, let's say, but it's a lot harder for a politician to argue for opening up and liberalization or legalization of gambling. It has been like this, and it will stay like this. It will stay a politically risky subject, and this also explains why many of the markets that I would have expected to regulate did not regulate. They did not open up. And another thing that happened is regulations is not exactly a one-way street. It's not like you have an unregulated market, then regulations come and the markets thrive from there, and it only gets better and better. Well, it can also go in the other way, where we have seen a lot of regulated markets, especially in Europe, where the rules got stricter and stricter, which made actually players to channel more and more to black markets rather than stay in the regulated markets. Simply because playing games in the unregulated markets comparatively becomes more and more fun, so to speak. Another lesson that I'm drawing from it is that iGaming markets in total is quite opaque when you include all of the gray markets and black markets globally in it. And this means that it is impossible to measure the total iGaming market or the total slots market or the total live casino market. It's impossible for anyone to know exactly how big it is, because no single person, not even the CEO of Evolution or another company, can know exactly the size. This also means that nobody exactly knows how big Evolution's market share is, how big it was, and how it is developing, whether it's shrinking or maintaining or actually dropping. And market share, in the end, is the ultimate measure of a company's competitive advantage, right? I mean, you can have some soft data about the reviews of the games that the supplier publishes, but in the end, it all comes down to market share, I think. And this will remain unknowable for the shareholders for the foreseeable future as well. So let's go to the lesson number 3, which is a question about demand. My initial hope for Evolution was this general theory or hypothesis about, well, what we have is gambling becoming available on your phone, right? On the most basic sense. Like the growth runway for it should be quite long, and the demand should increase like almost consistently every year for a long time. And the lesson I'm getting on demand is, well, first of all, what we have seen was the post-COVID boom, and that boom itself may not be representative about iGaming's long-term future growth, where a lot of demand came quite quickly in a short period of time. And on the more pessimistic side, one can even theorize that, well, iGaming is and has been for a while available to almost everyone. Not in its regulated form, obviously, but its gray or black market form. iGaming is available for anyone who wants to play with it, right? And has the discretionary income to spend on it. So exactly, and it's also important to note here, like the gray and black markets form of like iGaming, where you don't have a lot of restrictions on players and how they play and how much they can play. It tends to be the most fun form of gambling, so to speak, online gambling. So one can even theorize that we have a mature iGaming market. That's one way of looking at it, at least. I'm not saying it is, but that's, I think, one theory that one can keep in mind. And another way of seeing it is iGaming or online gambling is a form of entertainment. And as all forms of entertainment, it can be subject to drawdowns when the consumers are having a hard time because of inflation or because of job loss and so on. So the growth may not always stay positive all the time through all of economic activities and all of macro situations. I have seen some studies where it's been shown that gambling is anti-cyclical, but online gambling, as you know, as in its new form, is a new type of activity, and we do not. I don't think we have. We definitely know that how it's going to, shape up in hard economic times. And evolution's slowing down in Asia, despite all of the attacks and piracy problems. The fact that the baseline is not growing as quickly as to make up for the loss to the cyber attacks itself is showing that there may be a bottom to this bottomless demand that Asia typically is seen to have. So I think my expectations on demand has been a little too optimistic, and I think that demand may have some limits, and that demand also may have some ups and downs through the economic or other cycles, so to speak. And lastly, my fourth lesson from all of this is you shouldn't take a manager as all knowing through all cycles and all purposes and all strategies. In boom times, managers look like geniuses, obviously. And more than that, Evolution's managers have proven themselves just prior to and during the COVID boom. And they have taken advantage of the opportunity in a much higher, capacity than their competitors. So there is something there. It wasn't just a dumb luck, so to speak. But there are two things. It's like proving yourself in the boom times doesn't necessarily mean you also have what it takes to overcome a general market slowdown like we are seeing right now. Also, if you see that you're hitting the limits of your industry and you need to go beyond your industry's limits, well, that can be a whole different set of skills as well. Every public iGaming supplier that I have that I know of that has reached a certain large size has hit a wall in its growth. Playtech has hit a wall. NetEnt, before Evolution's acquisition, has actually hit a wall by the time of Evolution's acquisition, and Evolution now itself is seeing or seems to be hitting a wall in its growth. And I was personally hoping for Evolution to actually surpass the traditional gambling and iGaming, to be honest. What I mean is I was hoping for Evolution games like Crazy Time to become maybe a certain type of mainstream entertainment activity, almost like a competitor to TikTok or Candy Crush or Robinhood. And I don't think it has reached that level of popularity. It hasn't spread itself to the mainstream as much as I hoped for it. And one lesson that I take from this: if you want your company to expand beyond its traditional sectors, you should look at the management and the boards for relevant experience. Let's say, like the management obviously has by definition has focused on the iGaming itself and the online gambling sector in general. But when you look at the board, well, you see the founders, and that's basically it. I mean, you have obviously some other members of the board, but you do not have anyone on the board with the experience of a global tech giant or like an entertainment industry, sports industry, and so on. So the lesson that I'm taking is my ambition, my hope was for Evolution to surpass the limits of iGaming, but I actually failed to look at whether the management or the board has relevant experience that could realize such a vision, at least in a short amount of time. And so that's my final lesson. You shouldn't, just because your manager has been successful doesn't mean he will be successful in all other things that hasn't happened yet, so to speak. And where do we go from here? Obviously the growth has stopped, at least temporarily. The expectations are also low, as you can see from the market's valuation of the company. It's right now around 12 PE. But there is another way of looking at it. We have a profitable company that returns almost all of its profits to its shareholders through dividends and buybacks. So this means that, yes, if obviously the revenues and profits are going to fall from here, there isn't much that that can be done. it will not be a very happy investing even from this point on. But because the expectations are so low, and because profits are, it's such an asset light business where the profits are all returned to the shareholders. If Europe and Asia, it's the Evolution's main markets, if they just stabilize, they don't have to return to growth, but if they just stabilize from here, where in Europe, Evolution can manage to have players, come to its white market operators, and if in Asia, if there's somehow they stop the piracy or the market goes back to growing enough that even if there's a little piracy going on the side, Evolution still keeps its market there. But then you have quite good long-term returns from here because of this valuation and because of all those profit returns that I'm saying. And you can also have great long-term returns if just one of the following possibilities happens. If Asia somehow returns to its usual growth for one way or another, or if US actually becomes a real source of profits. Right now, it's not only a smaller market for Evolution, but its margins there are probably much lower than in Asia or in Europe, because you have to have studios in every state. So the amount of players you can address from each table is a lot smaller. And because of that, obviously, your profits are a lot smaller. But on the other hand, live casino as a concept is not widely known, even in the states where iGaming is regulated. So there is a lot of potential for growth there. And US in general is, we can all agree, is the greatest consumer market in the world. And so having a monopoly position in supplying such a possibly high growth market there has to come or could come with real profits there. So if just one of this happens, if Asia comes back to growth, or US somehow becomes a real source of profits, then we can have, I think, great returns from here. And so this is the lessons and the outlook that I get from my 5 years of Evolution.
Nice. I think it was very interesting. Kind of different of what I was expecting. I think you really went into introspection as an investor, which is cool. So yeah, maybe I should have collected some questions beforehand, but I guess I didn't. So we'll see what the audience have to say, and maybe I can redirect them to you, to your Twitter account. I think your handle is GNUFS, right? So I know it by heart. So yeah, Ali, I don't know if you have some closing remarks, or maybe I could ask some questions. I have a couple of questions, but
Sure.
Yeah. So I think one thing I would like you to comment on is the comments from the CEO in the AGM. So he, as far as I understand, he said 2025 will be a good year. So how do you interpret that? Like, what's a good year? You were there, but the whole thing was in Swedish, right? So yeah, just maybe some comments on that would be cool.
Sure. And the AGM was definitely an experience where, the main part of it was in Swedish, and you could see the almost like growing pains of a company where it has started obviously from one country with shareholder base mainly from that country, but it has now a global business with sales all over the world and shareholders all over the world. But anyway, to come to your question about the CEO's comment of the outlook, so to speak, for 2025. I personally do not put too much weight on it, to be honest, because I take management comments on the RNG for the last 5 years as a reason why not to put, like, I put trust in the management and that they will execute quite well, but just their outlook, or on just their short-term outlook, I do not put a lot of weight in, simply because, well, we have the RNG acquisitions, and for 1 quarter and the other for many quarters, they said that, we're going to have double-digit growth. That's our targets. It's a little late in the coming. Oh, it will be a few quarters down the line and so on. And at some point they stopped mentioning, and but they are still insistent on they were good acquisitions, and they're just a little late in the coming, and they spent like more than $2 billion on that acquisitions, and it's been 5 years, and we are still waiting for even a small amount of growth from all of that. And not to rehash the whole topic of those acquisitions, but that also tells you that the management, at least in its communications, seems to be quite perfectionist. And so if when they say, oh, we're going to have a nice or a great 2025, I cannot put a real, I cannot draw a conclusion from it. Right now, I think a show me mode where the management needs to show us first, and then we'll draw conclusions from that. But just telling, oh, it will be, this will be solved in the second half, or it will be greater in the second half. And I mean, you have to be realistic. Put yourself in the position of the CEO. You have game studios, and you have some customers. Some of those customers you know very well, but some of those customers you not really know very well, especially on the Asian side, because there are aggregators in between and so on. And how much the players will play next week, next month, 3 months down the line. Do you really know? Do you have no idea? Like obviously you can have some outlooks, and those outlooks can be proven or disproven, but it's, as I said, it's not a recurring revenue business. So it's quite hard to predict how much those players will play and how much of that play will go to your game versus other slot games or other sports betting or other live casino suppliers and so on. So it's like, even if you're the CEO yourself with all of the information that's available to the company itself, how can you foresee what's going to happen in 6 months, so to speak?
Yeah, for sure. Makes a lot of sense, and it adds extra complexity with the fact that the transcript is in Swedish, so you can't really. Yeah, I don't know. It's easier when it's first language and you can just understand.
I definitely agree. I mean, the majority. I mean, it's not a Swedish company anymore. It doesn't make. It makes almost none of its business, and sales, player activity wise, in Sweden. It's not majority owned by Swedish individuals or funds anymore. So I think there's either the company will go back to its own shell and go back to its corner and accept being a smaller company, or it has to expand from here. Not only expand from here product wise and sales wise, but also I think on IR wise, or how they communicate with the shareholders and so on.
Right. And that goes perfectly into my next question and last one. You mentioned briefly during the presentation that you obviously had some active role, or at least, it's likely that you have an active role on the shareholder capital allocation and share buyback and so on. And you mentioned you have another initiative online for a couple of months. So maybe you could expand on that. And I'm not entirely sure what it is, so maybe
Okay, sure. You can find it on my newsletter, but it's a short letter to the management that I also sent to them as well. It's basically argues that Evolution and its business model, its original business model, doesn't spend even $1 on consumer marketing, and that's a great part of it. That's why it's so profitable. Operators handle all of the costs of ads and marketing and consumer churn, but Evolution doesn't spend a dollar on it, and that's one of the reasons of its profitability. But I think it has come to a point where if Evolution wants to break free from the sizing limits of the iGaming sector, I think it needs to invest in some consumer brands. So it needs to market some amounts of money, some amount of capital to the consumers. How I envision it is invest in the visibility of specific games, like proven hits, like Crazy Time. And it would be a different type of marketing, I think, than operators, where they have to always, they have a churning base of players. So they have to reinvest in getting those players back to their own system. How I'm imagining Evolution's advertisement and marketing strategy, obviously I'm not a marketing professional, I'm just imagining how it would be, is more akin to Coca-Cola's, where it may be steady, but the idea is to makes a brand, whether it's, I don't know if it should be evolution or specific games. I'm thinking more about specific games, but it could be the other way around, where you build on it as in awareness, and later on the associations of it in the consumer's mind slowly. And it's not like you try to win back the customers you have lost last month, but it's a steady amount of like building and hoping for a point where it comes out crashing, like it comes out spreading to the mainstream awareness quickly, because those kinds of things happen. They seem to happen very quickly. Some product gets a mass appeal very suddenly, they become trendy. But when you look at it, there's years and years of small but incremental marketing pushes behind it. But I think what I'm frustrated with is, for example, you have Crazy Time. It's a game that has been spread basically by word of mouth. Evolution didn't spend much for its marketing to the end consumers. Obviously, they spend a little for the operators, but on the end consumer side, it did not. And the consumers, the ones who know that it exists, seem to love it. The problem is nobody knows that it exists. The online gamblers do, but they're a very small portion of the population. Like you have a proven hit that to a large percentage of the people who know about it, it is a good game. But you do not promote that game to a larger audience, because I mean, this part that I do not know, none of my friends knows about Crazy Time, that it exists. Like none of the normal people, so to speak, know that it exists, and that's my problem. Why don't they? Like you can know about it and say that it's a bad thing. You can say, oh, like it would be a much better situation where people knew about Crazy Time but warned you against Crazy Time. Like don't play those kinds of games, and there's gambling and it's wrong and it's bad for you, blah blah. But that would be a lot better position than being right now, where you have a hit, you have a proven hit. The problem is just nobody knows about it. And Evolution doesn't really have a lack of cash problem. Their problem is more like a surplus of cash, where they don't know what to do with it. And if you're going to get a nice return on your marketing, why not try it?
Yeah, and you can run like very, I guess, small tests on marketing and then scale. So it's not like a huge risk of spending. At least, I guess, I'm imagining it if they approach it like slowly. And also
in completely white market. Sorry to cut you off, but there are now completely regulated markets where Evolution's also revenue stream is quite well regulated. I'm specifically thinking about US states, where you can do these experiments. Obviously, running an ad campaign on a gambling product is risky in legal terms, in regulatory terms, in public relations terms. But you can do, let's say, you can do a celebrity tie-in in New Jersey. You can pay, I don't know, some Kardashian $10 million for 10 minutes of their time to come to the studio, spin the wheel in New Jersey, and you only market it to the New Jersey. And obviously, it's American pop culture. It leaks. You have something happening somewhere, but obviously the awareness of that happening goes through the whole world. But you keep it clean. You keep it there, and then you see like if it works or not. And in the worst case, what's happened? In the worst case, that you have wasted $10 million. Okay. So it's like it doesn't change. Like you have just wasted more than $2 billion on some useless slot developer. So like, I think we're okay with seeing if there's a possibility here with much smaller amounts, so to speak.
Yeah, that sounds accurate. And the other thing that came to mind when you were talking about specific games is that, for example, Uber, at least here in Portugal, or other delivery services, they advertise their service, but for example, they have McDonald's on it, right? So it's like basically order McDonald's on Uber or order McDonald's on whatever other service there is. So I think that model could work also with operators, right? So you have an operator advertising his own website, but on the website they're playing like an Evolution game or something like that. So it's not something like completely out of the box. It already exists. It's not like in gambling, obviously, but yeah, it sounds like a low risk, high return
Sure.
opportunity if it goes well. So yeah, hopefully maybe we can give a 10-year update 5 years time
Right.
and
That's my
be
hope.
happy with the returns.
Right. Let's meet in 5 years' time and like talk how much of a bullshit all of the lessons I draw from it was, and maybe
Yeah.
for good reasons, for positive news or due to negative news. But my
Yeah.
guess is it will be an interesting story in whichever direction it develops. Evolution will keep being a very interesting story intellectually.
Yeah, and it's interesting because some of my investor friends or people I just follow that only focus on like deep value or like super cheap stuff, right?
Mhm.
They're starting to notice evolution.
Right.
So I don't know if that's a positive or bad sign, but yeah. Anyways, it was like. Quality investment or like Fintwit darling
Right.
a couple of years ago, and now it's starting to really go down to like deep value and microcap investors and stuff
Right.
like that. So
Right. Right.
even though it's not a microcap, but
Right.
it's interesting. Yeah.
It's
So
funny how the narrative has changed. Like back when
yeah,
I first
exactly.
got to know about it, my mind was all about like what about the downside? Like what are the risks? Are there regulatory
Mhm.
risks? Are there competitive risks? Blah blah. And like on Twitter, I would try to find them out, and it was so hard for people to give me feedback on it. Where like it was impossible to talk about evolution and not just talk about the upside of it, like how
Mhm.
much of a great potential it was and how obvious it was. And right now
Mhm.
it's the other way around. Like right now the whole content about the evolution is about the downsides. I
Mhm.
guess in my my presentation included, but
Mhm.
you don't see a lot of like upside discussions on like, oh, maybe the U.S. market could boom this much and this could happen, or the Asia could return, or some other like the upside is, at least you cannot mention upside without mentioning the downside as well. And it's
Yeah.
like it's funny how the story of one company, of the same company with the same business model, has changed so much in 5 years, so to speak.
Hmm. Yeah, and I guess at these levels, or yeah, I'm not sure where the stock stands right now, but it would be even interesting just as a dividend or share
Sure.
buyback type play, right? So I don't know. Yeah, we'll have to wait and see what the future holds for us and for the shareholders. So Ali, just wanted to thank you so much for presenting this wonderful presentation you had. So we can just keep in touch and keep discussing evolution.
Exactly. Thank you for the time and opportunity.